Hi and welcome to another video with me, Sam Indyk. I'm the UK site manager at Investing.com and an analyst also at Investing.com. So today I'm joined by Anthony Cheung from Amplify Trading. Welcome, Anthony.
Hey, Sam. Good to be here.
How are you doing?
Good. I'm looking forward to the Easter weekend.
Good. That's great to hear. So I'm going to jump straight into it here. We're here to talk about this week's Nonfarm Payrolls report on Friday, which might mean a shortened Easter weekend for some people.
Yeah.
What are we expected this week from Nonfarm Payrolls?
Yeah, so it's definitely a unique one. It's not often that global markets generally are that traded or even in fact open on a Good Friday. Doing the job that I've always done, it was always Good Friday and Christmas were the only days off we ever got. But talking to the CME, the futures markets will be open and forex markets are open. But kind of first thing is that liquidity is going to be really thin, which is going to make price reactions quite volatile. So something to just be aware of straight up. But overall, as a non-farm payroll report this time, we are expecting a pretty solid report. And in fact, probably one of the best reports that we've seen going back several months. The headline's expected at 650,000. The unemployment rate is expected to show marginal improvement. And this would be in fitting with some of the employment data metrics that we've been seeing in the last couple of days.
Right, so people expecting another sort of blowout month then from non-farm payrolls, although we can't really judge too much of that given it's the sort of pandemic era, I suppose. In terms of those labour market indicators that you mentioned, which ones should we be looking at?
Yeah, so for anyone who's kind of not used to looking at economic data from the US particularly closely, essentially non-farm payrolls usually comes on the first Friday of the month, barring exceptions like a holiday and so on. But what happens is we get a series of employment indicators before that labour report from the US Labour Department comes out. One of the major ones of which we've seen just a few days ago, which is ADP, which is private payrolls, but it's a reflection of probably the clearest indication of what employment looks like on a national based level, but in private payrolls. And that figure came in at 517,000, expectations were for 550. It sounds like a miss, but that's an incredibly strong number. And under the bonnet of that number, it was chiefly led by improvements that we've seen in likes of leisure and hospitality sectors. One of the major things in the US that we're seeing at the moment is an incredibly fast vaccination rollout. And hopefully that continues in that way. But what that's led to then is the reopening on a state level, allowing people to go back to work. And so as that's picking up, more people going to work, we're expecting the jobs number on Friday to reflect that, as what did ADP, which is probably the greatest weighted piece of information that we have. The other thing is jobless claims. I'm sure people read a lot about that. That's been obviously very elevated in the recent pandemic environment. However, the trend is improving. And in fact, in terms of jobless claims, we're expecting that to continue in the coming weeks for those aforementioned reasons. So that's coming out, the latest figure a bit later. It shouldn't really move the needle too much. It should fit the narrative of generally an improving jobs environment, which is definitely what both the politicians and the central banks want to see, and probably feeds into then some of the rationale why equities are back up to all-time high levels. Yields remain at around 14-month highs, and the dollar's being pretty firm going into this release.
Yeah, you obviously mentioned the US 10-year yield there up at 14 months high. I think the dollar index in the first quarter had its best quarter since Q2 of 2018. Do you think we could see that carrying on after this data release?
Yeah, I think it's kind of it's probably going to fit the narrative, to be honest. I mean, we had Biden, the president, speak and unveil the first of a two-part announcement on infrastructure spending. We're talking about another $2 trillion plus on the 1.9 trillion just been sold, just been passed in Congress. So that's underlying this kind of growth story at the moment and what's supportive of this yield environment. Interestingly, I think perhaps when you and I last spoke a few weeks ago, it was high yields was kind of spooking the market, particularly in the equity space. But I think that's now been rationalized by participants, and now we're seeing that the higher yield environment is reflective of a positive growth story. And looking back through historical precedents, higher yields do tend to support the idea of higher equities on the basis of growth improving in the future, which of course we are anticipating to happen in the months and in the second half of this year.
Okay, well, that's great. Thank you very much, Anthony. If there's anything else you'd like to add, like where can we find more of what you do at Amplify Trading, please let us know.
Yeah, I think just to bookend payrolls, I think if you are going to trade it, as I said, it's quite a unique release because obviously it's Good Friday, so there won't be many people actually trading that event, and that does impact then the types of liquidity and it almost exacerbates the price reaction you're likely to see. So just be aware of that. It could mean that it's quite tricky trading conditions. But otherwise, yeah, to get more from Amplify and the content that me and the team put out, you can check out Amplify Trading on YouTube. There's a daily macro session that I put out every day, and also just search and subscribe on Apple or Spotify for Market Watch by Amplify Live, and there's a weekly podcast there you can check out.
Okay, that's great. Well, thanks very much, Anthony. And that's all from me. So again, thank you all very much for watching. Good luck trading, and I hope you have a great day.
Take care.
Cheers.